students, in present video I am going to explain about 8th problem from bills of exchange topic. I am taking this question from BCom first year semester 2 financial accounting 2 subject from Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. 8th problem. On 1st January, Mohan drew 3 bills worth 2400 on his debtor Suresh. First bill was for 700 rupees of 1 month, second bill was for 800 rupees of 2 months, and the third bill for 900 rupees of 4 months. Suresh accepted all the 3 bills. On 4th January, Mohan endorsed the first bill to his creditor Ramesh in full settlement of his account for 710 rupees. The second bill was discounted for 792 rupees. The third bill was retained by him till the date of maturity. On the date of maturity, the first bill was paid, but the second bill was dishonored. Noting charges amounted to 10 rupees. Mohan drew a fourth bill for 825 rupees, including 15 rupees for interest for 3 months. Suresh accepted. On the date of maturity, the third and fourth bill were honored. Pass the necessary journal entries in the books of Mohan, Suresh and Ramesh. This is the question. Let us understand the question first. Mohan on 1st January prepared 3 bills on Suresh and received acceptance from Suresh. Bill amounts: first bill is for 700 rupees. It is prepared for 1 month. Second bill is for 800 rupees, prepared for 2 months. Third bill is for 900 rupees, prepared for 4 months. So for all these 3 bills, Mohan is a drawer because he prepared the bill. Suresh is drawee because he is giving acceptance on these bills. So for Mohan, these 3 bills are bills receivables, asset. For Suresh, these 3 bills are bills payables, liabilities. So come to first bill. This first bill is endorsed to Ramesh on 4th January, same month on 4th date, in full settlement of 710 rupees. So Mohan has to pay 710 rupees to Ramesh. In full settlement, 700 worth bill, Mohan is endorsing to Ramesh. And on the due date of this bill, so first bill is prepared on 1st January, duration is 1 month. So from 1st January to 1 month means 1st February to first date, we have to add 3 extra days because this is bills of exchange. These 3 days are known as grace days. So 2nd, 3rd, 4th. Then due date is 4th February. On that day, bill is honored. Next come to second bill. It is prepared for 2 months now. So bill is discounted with the bank for 792 rupees. Discounting date is not given. Then our assumption is on acceptance received date only, on 1st January only, Mohan discounted this bill with the bank. So discount amount is 800 rupees minus 792 rupees, 8 rupees. And on the due date of this second bill, what is the due date? Bill is prepared on 1st January, duration is 2 months now. So 1st January to 1st February, 1 month, 1st March, 2 months. To this first date, 3 days if you count, then the due date is 4th March. On that day, second bill is dishonored and noting charges are given 10 rupees. So about noting charges, I made a separate video. So that video link I am giving in the description box and in iCards. So noting charges will be paid by the holder of the bill. In case of discounting, holder is bank, on the due date, bill is with the bank, so bank paid noting charges 10 rupees. And on the same date, Mohan prepared a new bill on Suresh because this 800 worth bill is dishonored. In that place, with the noting charges 10 rupees plus with interest 15 rupees. With 825 rupees, a new bill is created. So new bill amount 825. So this is 4th bill for us. And this bill is prepared for the duration of 3 months and received acceptance from Suresh on this new bill. On the due date of this new bill, nothing but from 4th March, 3 months if you count. So 4th April 1 month, 4th May, 4th June. To 4th date, 3 days if you count. Then the due date will be 7th. So 7th June is the due date of this new bill, 4th bill. On that day, bill is honored. Come to third bill, 900 rupees worth bill. This third bill is retained with the drawer. So for 4 months, bill is with Mohan only. On the due date, what is the due date for this bill? From 1st January, 4 months if you count. Then 1st February, 1st March, 1st April, then 1st May. So to this first date, 3 days if you count, then the due date of this third bill is 4th May. On that day, bill is honored. So finally, there are 4 bills. And for all these transactions, he is asking us to write the journal entries in the books of Mohan, drawer, Suresh, drawee, Ramesh, endorsing. So first, Mohan's journal we will see. So heading is Journal of Mohan. In brackets, Mohan is a drawer, no? Mention that. Date, particulars, LF number, debit, credit. Now in Mohan's books, we are writing journal entries. So analyze all the transactions from Mohan's point of view. First, what happened? Mohan prepared 3 bills and received acceptance from Suresh on all these 3 bills. So for receiving acceptance, we have to write the first entry. So first of all, why Mohan is preparing bills on Suresh? Because to Suresh, Mohan sold goods on credit. Sales amount 2,400. Because these 3 bills total is 2,400. So Suresh is liable for 2,400. So for sales in Mohan books, we have to write one entry now. In question, sales related transaction is not given. That is why from acceptance received, we have to start the journal entries. But to understand this acceptance received entry, you should know the sales entry also. Sold goods to Suresh on credit. Entry is Suresh account debtor to sales account. Amount, these 3 bills total, 2,400 rupees. Why Suresh account is debited? Because Mohan is giving goods to Suresh. So Suresh is a receiver for these goods. Suresh account is a personal account. Personal account rule, debit the receiver, credit the giver. Suresh is a receiver now, therefore Suresh account is debited. Why sales account is credited? Mohan is giving goods to Suresh. So from Mohan, goods are going, goods, asset, real account. Real account rule, debit what comes in, credit what goes out. Goods are going now, therefore goods account we have to credit. Instead of writing goods word, we write the transaction name, that is sales account. So what is the effect of this entry on balance sheet? In Mohan's balance sheet, Suresh account is debited. So a personal account is debited. So if any personal account is debited, then the meaning is that person is a debtor. If any personal account is credited, then the meaning is that person is a creditor. So debtor means he has to pay money to us. Creditor means we have to pay money to him. Suresh account is debited. So Suresh is a debtor. Debtor is an asset. Asset shows a debit balance. That is why in entry, asset is debited. Suresh account is debited. So in balance sheet asset side, debtors 2,400. This is the effect of first entry on balance sheet. Now what happened? Mohan needs a written proof from Suresh for this 2,400. So Mohan prepared a bill. He presented that bill to Suresh. Suresh accepted that bill. So what happened here? Debtor asset is converted into another asset known as bills receivable. Then this debtor asset we have to cancel and a new asset bills receivable we have to create. So debtor account will get cancelled and a new asset known as bills receivable appears in the balance sheet. So how we created debtor account? By debiting Suresh. How to cancel? By crediting. Therefore, in first entry, Suresh account we have to credit to Suresh account. We have created Suresh account with the 2,400. So we have to cancel with the same amount. Amount is 2,400. Then which account we should debit? A new asset, bills receivable we are creating. Asset shows a debit balance now. So if you want to create any asset account, you have to debit that. Therefore, bills receivable account we have to debit. Amount same, 2,400. When acceptance is received on 1st January, no? Mention that date. 1st January. Year is not available in the question. And one more point is, Three bills are there, no? We need not to write three separate journal entries because date is same, entry is same. So we write only one entry in amount. The total of these three bills we show. That is enough. And about these three bills in narration, we have to mention clearly. Journal of Mohan, drawer, date, particulars, LF number, debit, credit. 1st January, bills receivable account data to Suresh account, 2400 rupees. Narration, being acceptance is received on three bills worth 700 rupees, 800 rupees and 900 rupees for 1 month, 2 months and 4 months. Second entry is for which transaction? See, so many bills are there, no? You will get a doubt and you may think that first I will write all journal entries of first bill, then second, finally third and fourth. That is wrong. Not on bill wise, date wise we have to write the journal entries. So think next what happened. On the same date, this second bill is discounted, no? Because first bill is endorsed on 4th January. So first discount entry, 1st January related entry we write. After that, we will think about that endorsement entry. So next second entry is discounted with the bank. For that, we will write the journal entry. In question, discounting date is not given. Our assumption is on the same day, 1st January. So on 1st January, now for discounting, we have to write the journal entry. So discounting means what? Selling the bill to bank before the due date of the bill. So second bill is prepared on 1st January and the second bill due date is 4th March. So before 4th March only, Mohan needs this 800 rupees. So on 1st January, he sold this bill to bank. That is called discounting the bill. When he sells the bill to bank with Mohan, now bill is not there. So in first entry, we debited this bills receivable, no? In this 2400, this 800 is also there. That is debited. Now we are selling this bill to bank. So after that, bill will not be with us. Means in this bills receivable 2400, 800 we have to cancel. So how we created? By debiting. How to cancel? By creating two bills receivable account. Amount is 800 rupees. Second bill amount. Then what a bank does? They deposit this 792 rupee in our account. So bank balance is increased with 792 rupees. Bank account is a personal account because with the firm name is if you open any account that is personal account, no? Personal account rule, debit the receiver, credit the giver. Bank is a receiver. Therefore, we have to debit bank account with 792 rupees. Bank account data 792. Then what about the difference 8 rupees? Instead of receiving 800, Mohan is receiving only 792 from bank. So Mohan is allowing 8 rupee discount to bank. For Mohan, this 8 rupees discount allowed. Loss. Losses come under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is loss. So we have to debit. Discount allowed account we have to debit. Discount allowed account data 8 rupees. You can write discount account also, no problem. Both are correct. And what is the effect on balance sheet? So in this 2400, 800 we have cancelled. Then the remaining amount 1600 appears on asset side. Second entry on 1st January, bank account data, discount allowed account data, two bills receivable account. Bank account 792 rupees, discount allowed 8 rupees, bills receivable 800. Narration, being second bill is discounted. Next what happened? On 4th January, first bill is endorsed to Ramesh. For that now we have to write the entry. First of all, why Mohan is endorsing this bill to Ramesh? Because Mohan has to pay 710 rupees to Ramesh. Why? Because once what happened? From Ramesh, Mohan purchased goods on credit. For that purchases, first we have to think the journal entry. Purchased goods from Ramesh, 710 rupees. Entry will be purchases account data to Ramesh account. Amount 710 rupees. Why purchases account is debited? Because Mohan is receiving goods. Goods account is a real account. Real account rule, debit what comes in, credit what goes out. Goods are coming. We have to debit goods account. Instead of writing goods word, we wrote transaction name, that is purchases. Why Ramesh account is created? Ramesh is giving goods to us. Ramesh is a giver. Personal account rule, debit the receiver, credit the giver. Ramesh is a giver, no? Therefore, Ramesh account is created. So what is the effect of this entry on balance sheet? Here, a personal account is created, means that person is a creditor. Creditor is a liability, liability shows a credit balance. That is why in entry, liability, Ramesh account is created. And the liability side it appears. Creditors, 710 rupees. Now come to this endorsement entry. Endorsement date is 4th January. In full settlement, Mohan is endorsing 700 rupees worth bill to Ramesh. So now bill will not be there with Mohan because already it is endorsed to Ramesh. So in Mohan's books, bills receivable in this 1600, that 700 will get cancelled. Now the remaining bill is 900 rupees. Third one. So how we created 700 worth bill? By debiting. How to cancel? By crediting. So, to bills receivable account, 700 rupees. Next, in full settlement, 700 worth bill we are endorsing to Ramesh. Now, Ramesh account is also will get cancelled. No? Now, Ramesh is not a creditor because we have cleared his loan. How we have created this creditor account? By crediting Ramesh account. How to cancel? By debiting. Debit Ramesh account with 710 rupees. Ramesh account debtor 710 rupees. We have to pay 710, but we have given 700 worth bill. So 10 rupees profit to us, known as discount received. So to Mohan, that discount received is gain. So gain comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, gain, discount received, we have to credit. Instead of writing discount received, you can write discount account also. Both are correct. I am writing discount received account. Amount in credit column, 10 rupees. So this is the entry for endorsing the bill. Third entry is on 4th January. Ramesh account debtor, 710 rupees. To bills receivable account, 700. To discount received account, 10 rupees. Narration. Being first bill is endorsed and discount received. Next, which date related transaction we should see? First bill on the due date 4th February, first bill is honored. After endorsement, bill is honored. Means at the time of due date, bill will be with Ramesh. No? Ramesh is the holder of the bill. So Ramesh goes to Suresh and Suresh paid money. Transaction is between Ramesh and Suresh. Now we are writing journal entries in Mohan's books. So for this honor in Mohan books, we need not write any journal entry. So related to first bill 700, that endorsement entry we wrote. So honor entry we need not write. Then next, which day transaction comes? 4th March. Second bill due date. On that day what happened? Bill is dishonored. Suppose bill is honored. Means what? On the due date, this bill is discounted now. Bank is the holder of the bill. So bank went to Suresh. Suppose Suresh paid money. Then transaction will be between bank and Suresh. Mohan is not affected. Therefore, in Mohan books, we need not to write any journal entry for honor of the bill. But in present problem is giving that this discounted bill is dishonored. On the due date, bank went to Suresh and Suresh failed to pay this 800 rupees to bank. Now bank is a holder of the bill. Now bank wants to have a legal proof for this dishonor. Then bank went to public notary. So noting and protesting works are completed and bank paid notary charges 10 rupees. On the due date, bank pays. But finally, who is liable for this 10 rupees? Mohan only, no? So bank comes to Mohan and demands for 800 rupee bill amount plus noting charges 10 rupees. So we are in Mohan books. Now to Mohan, bank is becoming a creditor because Mohan has to pay 810 rupees to bank. So creditor is a liability. Liability shows a credit balance now. Therefore, we have to credit bank account. Bank is demanding 810 rupees. For 810 rupee, bank is a creditor. When second bill due date, that is 4th March. Now, Mohan demands that 810 rupees from Suresh only, no? Because Suresh has to pay. So for this 810 rupees, Suresh is becoming a debtor now. So debtor is an asset. Asset shows a debit balance. Therefore, Suresh account we have to debit. Suresh account debtor to bank account 810 rupees. So this is an entry for dishonor of second bill. And what is the effect of this entry on balance sheet? Again, Suresh is becoming a debtor for 810 rupees. So a new asset debtor is created with 810 rupees. And the bank is a creditor for 810 rupees now. Liability side, creditor is created with 810 rupees. Fourth entry, 4th March. Suresh account debtor to bank account 810 rupees. Narration, being second bill is dishonored and noting charges paid. Okay, Suresh failed to honor this bill. We don't leave Suresh like that, no. So again, we prepare a new bill on Suresh. That new bill amount is original bill amount 800 plus 10 rupees. Bank paid to public notary. Bank demands that 10 rupee from Mohan. Mohan is demanding that 10 rupee from Suresh only, no. So finally, for this noting charges amount 10 rupees, Suresh is becoming responsible. So in this new bill, that noting charges 10 rupee we should add. And a new bill we are preparing for a period of 3 months. Means there is a delay of 3 months. For this 3 months delay, Suresh has to pay 15 rupees interest also. So new bill amount is 800 plus noting charges 10 rupee plus interest 15 rupees, 825 rupees. So for this new bill, again Suresh is becoming a drawee. We prepared that bill, we presented that bill to Suresh and Suresh accepted that bill. So for receiving acceptance, already you have the entry, bills receivable account add to Suresh account. Same entry comes here. So no need of any explanation again. When second bill due date on March 4th, same entry, bills receivable account debtor amount 825 rupees to Suresh account 825 rupees. And what is the effect of this entry on balance sheet? Now bill value becomes 900, third bill amount plus newly 825 bill is also created. Total 1725. And this Suresh debtor will get cancelled, because on that person we prepared a bill and we received acceptance. Now by debiting we have created debtor account. Now we are cancelling that, because on that debtor we prepared a bill and we received acceptance from him. 4th March, Suresh account debtor to interest account 15 rupees. Narration, being interest receivable from Suresh. Next is for interest of 15 rupees. On same date, 4th March, for that interest we have to write a separate entry. From whom we should receive that interest? From Suresh. So for this interest amount, again Suresh is becoming a debtor. Then Suresh account we should debit with 15 rupees to interest account. To Mohan, this interest is an income, because in future that interest should come from Suresh. So income comes under nominal account. As per nominal account, credit all incomes and gains. Therefore, we are crediting interest account. So this is not the entry for interest received. This is for interest receivable. 4th March, bills receivable account debtor to Suresh account 825 rupees. Narration, being acceptance is received on 4th bill. Next, what happened? Third bill is honored on 4th May. So for that we have to write the entry now. When bill is honored, so that bill becomes invalid, because we are giving that bill to Suresh. On that bill already money came. So bills receivable 900 will get cancelled now. Then the remaining bill is 825, second bill value. By debiting we have created 900 bill. To cancel we have to credit. So Credit bills receivable with 900. 900 cash is coming from Suresh. So cash, asset, real account rule. Debit what comes in, credit what goes out. Cash is coming now. Debit cash account. 900 rupees. Date, third bill due date. 4th May. So this is the entry for honor of third bill. And what is the effect on balance sheet? Bill is cancelled, 900 worth bill. Cash, a new asset, appears with 900 rupees. 4th May, cash account debtor to bills receivable account, 900 rupees. Narration, being third bill is honored. Now come to last entry. This fourth bill is there, no, 825 rupees worth bill. On the due date of this bill, 7th June, bill is honored. So on 7th June, for honor of this fourth bill, we have to write the entry. Third bill honor entry, fourth bill honor entry. Both will be the same only. So entry is same. Cash account debtor to bills receivables account. Fourth bill amount 825 rupees. So what is the effect on balance sheet? Now cash increases by 825 rupees. 900 plus 825. Now cash balance is 1725. And the bill will get cancelled now because bill amount only we are receiving. Creditor already cancelled. 7th June, cash account debtor to bills receivable account 825 rupees. Narration, being fourth bill is honored. Journal of Mohan completed. Now come to Journal of Suresh. Drawing. Journal of Suresh, in brackets drawing. Now analyze all the transactions from Suresh point of view because we are writing journal entries in Suresh books. So first what happened? Mohan prepared 3 bills and Suresh is giving acceptance on these 3 bills. Why Mohan is preparing these 3 bills on Suresh? Because once Suresh purchased goods from Mohan on credit. So for purchases, entry is purchases account debtor to Mohan account. 3 bill amounts total 2400. As per this entry, in Suresh balance sheet, Mohan is appearing as creditor. Mohan is a creditor for 2400. So creditor is a liability. Liability shows a credit balance. That is why in entry Mohan account is credited. Now for this 2400, Mohan prepared 3 bills and we have given acceptance on these 3 bills. Now Mohan is not a creditor because same creditor liability is converted into another liability known as bills payable. So creditor liability will get cancelled and a new liability bills payable will be created. How to cancel creditor liability? By crediting Mohan account, we have created a creditor liability. To cancel that, we have to debit Mohan account. Mohan account debtor 2400. A new liability known as bills payable is created. No? So liability shows a credit balance. We have to credit bills payable account. Amount same 2400. Date 1st January. Acceptance date. Journal of Suresh. Drawing. Date, particulars, LF number, debit, credit. First entry is on 1st January. Mohan account debtor to bills payable account 2400. Narration. Being acceptance is given on 3 bills worth 700 rupees, 800 rupees and 900 rupees for 1 month, 2 months and 4 months. Next transaction is second bill on the same day 1st January. Mohan is discounting this second bill with the bank. But this discount transaction is between Mohan and banker. Now we are writing journal entries in Suresh books. Suresh is not affected. Therefore, for second entry discounting in Suresh books, we need not write any journal entry. Next, what happened? On 4th January, first bill is endorsed to Ramesh. So this transaction is between Mohan and Ramesh. Suresh is not affected. Therefore, for first bill endorsement in Suresh books, we need not write any entry. Next, what happened? First bill is honored on 4th February. So on that day, Ramesh is a holder of the bill. Now Ramesh came to Suresh and Suresh paid bill money. We are writing journal entries in Suresh books only. So for this honor in Suresh books, we have to write the journal entry. On 4th February for honor. So in this bills payable 2400, first bill 700 will get cancelled because we are paying money. Then the remaining bill value will be 1700. So bills payable we have to cancel. In first entry we have created this bills payable by crediting. To cancel we have to debit. Bills payable account debtor 700 rupees. 2. Suresh paid money. So from Suresh cash is going. Cash is an asset. So asset comes under real account. Real account rule. Debit what comes in, credit what goes out. Cash is going now. Credit cash account 700 rupees. So this is the second entry. First bill honor entry. 4th February bills payable account debtor to cash account 700. Being first bill is honored. Next what happens? Second bill due date 4th March. On that day, holder of the second bill is bank or no? Because bill is discounted. Bank came to us, to Suresh, and Suresh failed to honor the bill. So for this dishonor in Suresh books, we have to write the journal entry now. So when bill is dishonored, that bills payable liability will get cancelled now. In this 1700, second bill amount 800 will get cancelled. Then the remaining bill amount will be 900. So by crediting we have created this 800 bill. To cancel we have to debit. Bills payable account debtor 800 rupees. Mohan is not going to leave us like that. Again we have to pay this money to Mohan in future now. So again for this second bill amount 800, Mohan is becoming a creditor. Not only for that 800, for noting charges 10 rupees also Mohan is becoming a creditor. So noting charges are paid by bank. Bank demands that noting charges money from Mohan. Then Mohan demands that money from Suresh only. No? So to Suresh, Mohan is a creditor for this bill amount 800 rupee plus that noting charges amount 10 rupees. Total 810 rupees. So creditor shows a credit balance now. We have to credit Mohan account. We have to credit Mohan account with 810 rupees. Then that 10 rupees what? Noting charges. Finally, who has to bear this noting charges? Suresh only. Because Suresh only is the responsible person for this dishonor, no? So in Suresh books, that noting charges expenditure we have to show. Expenditure is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, noting charges expenditure we have to debit. Noting charges account debtor 10 rupees. Date, second bill due date 4th March. And Mohan account is created now. A new liability creditor is again created with 810 rupees. Third entry is on 4th March. Bills payable account debtor 800 rupees. Noting charges account debtor 10 rupees. To Mohan account 810 rupees. Narration: being second bill is dishonored and noting charges paid. Next is for on the same day 4th March. Mohan prepared a new bill for 825 rupees. On that bill, Suresh is giving acceptance. For giving acceptance, you know the entry Mohan account to bills payable. Here also same entry comes. Date 4th March. Amount 825 rupees. So what is the effect of this entry on balance sheet? Mohan account we are debiting with 825. Means creditor account is cancelled. And bills payable we have credited with 825. Means another 825 bills payable is also created. So total bills payable amount becomes 1725. 4th March, interest account debtor to Mohan account 15 rupees. Being interest payable to Mohan. Next entry is for interest payable. On the same date, 4th March. Suresh has to pay 15 rupees interest to Mohan. So for interest, Mohan is becoming a creditor again. Therefore, credit Mohan account with the interest amount 15 rupees. Suresh has to pay this interest. Means to Suresh, this interest is an expenditure. So expenditure comes under nominal account now. As per nominal account rule, we have to debit interest account. We are not paying the interest. This is the entry for interest payable. And in balance sheet, again creditor, a new liability will be created with this interest amount, 15 rupees. 4th March, Mohan account debtor to bills payable account, 825 rupees. Narration, being acceptance is given on 4th bill. Next entry is for 3rd bill honor entry. On 4th May, 3rd bill is honored. So what happened? Suresh paid money. Then that bills payable liability will get cancelled now. 3rd bill amount 900 rupee. From this 725, 900 is cancelled. Then the remaining amount will be 825, 4th bill amount. By crediting, we have created bills payable liability. To cancel, we have to debit. Bills payable account debtor. 3rd bill amount 900 rupees. 2. We are paying cash now. So from us cash is going. As per real account rule, credit cash account 900 rupees. 4th May, bills payable account debtor to cash account 900 rupees. Being 3rd bill is honored. Now come to the last entry. 4th bill honor entry on 7th June. Honor entry is same now. Bills payable account debtor to cash account. Now 4th bill amount 825 rupees. So what is the effect on balance sheet? Now this final bill is also cleared. Now this 825 bills payable liability is cancelled. And in that 825, interest 15 is also there. So this creditor interest account also will get cancelled. 7th June, bills payable account debtor to cash account 825 rupees. Narration, being 4th bill is honored. With this, Suresh journal, Roy's journal is completed. Now come to Ramesh journal. Journal of Ramesh. In brackets mention that NRC. Now we have to analyze the transactions from Ramesh point of view. First what happened? Mohan has to pay 710 rupees to us. Means to Ramesh. So in full settlement, 700 worth bill is coming. So first, why Mohan has to pay 710 rupees to us? Because once we sold goods to Mohan on credit. For that, what is the entry? Mohan account debtor to sales account, 710 rupees. What is the effect of this entry on balance sheet of Ramesh? So Mohan account is debited. A personal account is debited, means he is a debtor. Asset side, debtor, 710 rupees appearing. Now, as a full settlement, a bill is coming, 700 worth bill. See, for drawer, a bill is always bills receivable because he will receive money in future. For drawee, a bill is always bills payable because in future he has to pay the money. For NRC, a bill is always bills receivable because on that bill in future he receives money from drawee, So in NRC's books, in drawer books, we have to use bills receivable word. In drawee's books, we have to write bills payable word. So here, that debtor asset is converted into another asset, bills receivable. Then debtor asset will get cancelled. And a new asset, bills receivable, will be created. But amount is not 710 because 700 worth bill only is coming now. A new asset, bills receivable, we have to create. How to create? Asset shows a debit balance now. Therefore, by debiting, we have to create bills receivable account debtor. Bill value 700 rupees. Once we have debited Mohan account with 710. In books, we wrote that he is a debtor. Now he is not a debtor. That a debtor account we have to cancel. By crediting Mohan account, we have to cancel. To Mohan account, 710 rupees. Then that 10 rupees what? Lost to us. Nothing but discount allowed. We have to receive 710 rupee from Mohan. As a final settlement, 700 worth bill we are accepting. means 10 rupees discount allowed by us to Mohan. So discount allowed, we have to debit as per nominal account rule. Discount allowed account debtor, that is 10 rupees. And date is 1st January. Journal of Ramesh, NRC. 4th January, bills receivable account debtor 700 rupees, discount allowed account debtor 10 rupees, to Mohan account 710 rupees. Narration, being endorsement is received. Next is for honor of this bill. On the due date of this first bill, on 4th February, Ramesh went to Suresh and Suresh honored the bill. He paid the money. Cash is coming now. In Ramesh books, for this honor, we have to write the entry. Now that a bills receivable asset is converted into a new asset, cash. So bills receivable asset we have to cancel. By debiting we have created, by crediting you have to cancel. To bills receivable account. Bill value 700 rupees. Cash is coming now. A new asset is created. Debit cash account as per real account rule. Debit what comes in, credit what goes out. And date is first bill due date 4th February. 4th February, cash account debtor to bills receivable account 700 rupees. Narration, being bill is honored. With this, Ramesh journal is also completed. So for remaining bills in Ramesh books, we need not to write any journal entries because he is not concerned with that remaining bill transactions. Take a screenshot of journal. Next page. This is the end of present video. Hope this video is helpful to you. Thank you.